Welcome to the Halftime Report. I'm Scott Wapner. We're here at Post 9 at the New York Stock Exchange. We're opened for business in the biggest IPO ever, up about 16% right now. We'll track every single move of it. SpaceX investor, Altimeter Capital founder and CEO Brad Gerstner is with us here. Stephanie Link is as well, Malcolm Etheridge, and Rob Seach. It's great to have everybody here. It is a momentous day. The timing of this, getting it open before noon, momentous in and of itself. You got a big allocation.
Yeah.
What do you think you're buying into today? What do you feel like you are?
I mean, first, let's just take a moment. Scott, first, thanks for having me on. Take a moment to celebrate what an incredible day this is for America, what an incredible day it is for the hard work of the thousands of people at Starbase who've worked to put us back on the top in space. Remember, when SpaceX got started, right, we didn't even have a shuttle to go to space to pick up our own astronauts. We were paying the Russians to go get our astronauts. Today, we're back on the top in space. I think this is what makes the country great. It's a great moment to celebrate. With that said, yes, we were buyers in the IPO. We were lucky enough to be shareholders ahead of the IPO. I think there's an incredible moment for the company. The numbers that are out there are not layups by any stretch, but hopefully today we can unpack that a little bit, Scott, because I think they have a real path on both AI hyperscale compute, on X.AI, on launch, and the things they're doing in connectivity that are going to change the country.
Yeah, I mean, you mentioned some very, very big numbers, and this is where the real work begins, right? To try and reach those lofty targets that some have set, including the company itself.
Right.
A TAM of $28.5 trillion. Morgan Stanley's looking for SpaceX's revenue to reach $3.4 trillion in 2040. Lofty targets, obviously, by Goldman Sachs as well. So now we see what they can do from here.
Right. Well, I mean, let's not go all the way out to 2040. I think it's $160 billion, which is a little more pedestrian in 2028. And remember, something extraordinary happened. The last time I was on the show, just a couple weeks ago, I said everything about the IPO changed. Why? Because they had moved into the category of being an AI hyperscaler. In literally 6 weeks, they went from not in the game to $27 billion of AI hyperscaler revenue with big deals from Anthropic and Google. What is the one thing we can all underwrite? I think we can all agree Elon Musk and the team at SpaceX are as capable as anybody on the planet. Jensen has said they're number one at standing up terrestrial data centers, at standing up AI data centers. On my podcast, Jensen said they did in 100 days what it took others 2 to 3 years to do. So if the bet, in going from 20 billion or 18 billion last year to 160 billion, a huge portion of that is standing up AI data centers and leasing them right to the Anthropics of the world, the Googles of the world. I think they're going to run away and consolidate that business. My estimate is in a few years they're going to be the largest AI hyperscaler in the United States.
I mean, it's probably why, as you heard Sequoia's Sean McGuire in the interview with our friends in the prior hour suggest that massive TAM that I mentioned could be, in his words, an underestimate. This company has the most important mission of any company in history, he said. Thinking about 10 years from now, I think of it more like NVIDIA 3 years ago. High confidence in the explosive revenue growth that they can deliver. And he made the point, I think, which was really interesting to listen to, and they can ramp really quickly. To your point, they've already proven their ability to ramp certain parts of the business really quickly. So doubt those large numbers at your own peril, I suppose.
Yeah, I mean, listen, again, today, this was not a get-rich-quick scheme today. $1.7 trillion is not an inadequate valuation. You see the stock up 20% today. So I mentioned the AI hyperscalers. What we haven't mentioned is the pending acquisition of Cursor. Look, we were looking at investing in Cursor. I think it was probably the next best lab in the country beyond the frontier labs. We thought this company could get to $10 billion in revenue on its own this year. Right now, coupled with SpaceX, we think they can really have a shot at building, with that huge compute infrastructure, really building another frontier lab. Remember, intelligence is the log of compute. They have the largest coherent clusters in the country, and so we think they're going to be in the game at building X.AI into a real frontier lab.
Steph, you're one of the few in our orbit, pardon the pun, who wanted in on this IPO, who said you're going to be a buyer. Are you?
I thought this was going to be up 40, 50%, up 20. It's an absolute screaming buy. But I also said you buy a small position, it's going to be volatile, and you just set it and you forget it. Because he has a great track record, Elon Musk. Tesla was up 25,000% since their 2010 IPO. And that is a big, big number. So who knows what this company is going to do, but a total addressable market, even if it's half of the 28.5 trillion that is estimated, that's still huge runway for this company. And founder-led companies usually increase shareholder returns by double. So you want to own a founder-led company. They have the sense of urgency, and he does. We know that for facts. The space business, they have a 90 share. Starlink, they have 10 million customers. Brad just talked about the AI opportunity. There's a lot of ways this company can win. They can just win in one of these things, and I think the stock is much higher.
You've owned this stock in pretty good size in private market.
And in the IPO as well. We've been participants across our client base. I think this is the most strategically unique asset ever to come to market. And they're going to have enormous pricing power. The one risk is their biggest client's the U.S. government. So when you have that type of pricing power, monopolistic pricing power, where your costs are coming in tremendously and your profits are going up enormously, the revenue opportunity and everything that Brad outlined. And by the way, if you can't listen to that and get excited about this business, there's actually something wrong with you. This IPO is the most engineered IPO in history, too. Do you think any of the underwriters are not going to support this? The size of the offering, the retail participation. So there's a lot to be excited about. The index inclusion, right?
NASDAQ 100 in about 15 days.
So much that is supportive of here. Now, there is a huge underwriter's lockup coming off at some point in the future. There may be an opportunity at some point to be a better buyer. However, I think there's so much enthusiasm around this. And if you're a really long-term thinker and you believe in the visionary characteristics of this man, I don't know how you can't be excited. And I think the writing's on the wall in the roadshow that this and Tesla could be together at some point in time.
Well, that's the great speculation. So stock's up about 20-ish%. As Leslie Picker was saying from the trading floor of Morgan Stanley, the sweet spot, if you will, and how these things are, hoped to trade in their earliest moments of trading. What about you? Interest from you or no, Malcolm?
No, and I think that Brad framed it perfectly as far as what you should be considering this company to do if you're buying in at IPO, right? The S1, the prospectus told you basically we're an AI company now, right? The focus, the TAM that they talked about, the $28 trillion, which, by the way, is the size of the GDP of the entire United States. But that aside, like the TAM is all from AI. It has nothing to do with launching rockets. It's nothing to do with satellite connectivity. And I'm being general when I say nothing to do with, but most of it is hyperscaler CapEx related to we're building data centers trying to unseat some of the bigger names.
Which is funny because now the biggest revenue percentage they get is from the connectivity angle.
Yes,
Starlink's the biggest contributor today. Not suggesting in any way that means it's the biggest contributor in the future, because it's obviously in what you're saying is factual, but it speaks in some respects to how this company is transforming itself in real time. Let me finish the thought.
What I was going to say is if you really want pure play space, because the name is a little bit misleading now, SpaceX, you could be looking at like an AST that's selling off tremendously today. You could be looking at Rocket Lab, which is selling off tremendously today in response to raising capital to go participate here. Just by comparison, if I wanted a hyperscaler that's building to put AI data centers all over the country and all over the globe, I don't have to pay 100 times sales to do it. I could look at something like an Alphabet at 10 times sales. I could look at an Amazon at 3 times sales. What about XAI is so much more valuable, 27 times roughly the value of Amazon at this price point? That's the question I have to be asking.
I'll let you answer that.
Yeah, I mean, I think the pushback is important and fair. Just to go to the numbers for a second, I think if you look at Goldman Sachs and Morgan Stanley's numbers for 2028, they have AI about 2x what the connectivity or Starlink revenue is. So Starlink is going to be a massive, massive business. We shouldn't underestimate it. And remember, Starship being able to have the advantage that it's is going to have to space unlocks everything else. So the call options that we're valuing of orbital data centers, of all the stuff that lies in front of us. And remember, we're applying a future multiple. We're not looking backwards. We're saying, what is this going to be worth in the future? We have the greatest visionary, the greatest engineer, the greatest operator. And let's give a shout out to Glenn Shotwell and the team. Everybody always talks about Elon, but standing right behind Elon is just an extraordinary team that has been relentless for decades, putting us back on top in space.
She was probably there, at some of the, the darkest moments of the trajectory of this company, even getting to a day like today. One of the earliest employees, I think Elon said maybe number 7 or something to that regard. But if you look at Elon himself, when he was addressing his own employees this morning from out at their HQ, the Starbase, he said that 10 years ago, I gave SpaceX less than a 10%. I'm sorry, he said I gave SpaceX less than a 10% chance of succeeding at all. That was back in 2002. It speaks to the road full traveled to get to this day. And I'm glad that you mentioned her and the role that she's played, because she's been there from near beginning to help get this company to this moment.
Right. And we're here celebrating these moments, but the near-death experiences that Elon and Gwen will recount time after time, not just at SpaceX, at Tesla, et cetera, and they continue to reinvent themselves at scale. Just think about what they did over the last 6 weeks heading into this IPO. Not to mention launching Falcon 9 with a bunch of satellites the morning of the IPO successfully into space. But just in the last 6 weeks, doing these deals, these AI hyperscaler deals, acquiring or an option to acquire Cursor, these are massive things. I can't imagine another Mag 7 company that's entrepreneurial like this at this scale. So if you ask me why I'm betting on them, right, you don't have to be either or against Alphabet, by the way. You don't have to be either or against it. You can bet on those companies as well. But this one, to me, if you wanted to bet one company on the future of innovation, the best entrepreneur that combines visionary with engineering skills, you got to be in space.
It's moonshot optionality is what he's talking about. There's so many different verticals that they are focused on to get moonshot optionality. And I think, granted, to Malcolm's point, there wasn't a lot of discussion on that topic in the roadshow. It's so funny. It was such a big part of the valuation, but they didn't address it a lot in the roadshow. They focused on their core business. That's admirable.
Well, look at what Wolf is saying today, right? They're one of the early initiators, so the street's sort of starting to weigh in. 175 is their price target, so you're looking 30% from the set price. We'll obviously see what's happening in the trade here. It tells a little bit of a different story from this moment forward. But they call this, quote, a launch company wrapped in a telecommunications company wrapped in a hyperscaler. Near zero space launch cost creates one of the widest moats in history that will drive 70% top line growth and near doubling EBITDA margins through 2030.
I mean, they have 90% share in space, as I mentioned, but they also have a huge cost advantage because they have reusable rockets and they have scale. And so their launch costs and Starship's launch costs are going to go from $14 million to something like $3 to $4 million. That is a lot of operating leverage in one of their businesses, and they could probably get, in terms of Starlink, 250 million customers between now and 2030. That's what's projected. If they get half of that, that's a heck of a lot better than where they are today at 10 million. So to me, yeah, the AI story is interesting, and Anthropic and Google certainly make it more interesting. But I think there's a lot of other parts of this company that are very exciting, and I don't think it's getting enough attention.
Let me say one thing. Make no mistake about it. This valuation hangs on the fact that we have huge demand for an AI compute future, right? They just sold this compute to Anthropic and Google at a big premium, Scott, because we are out of compute in this country. If you look at Noam Brown, who's one of the lead researchers at OpenAI, I'd encourage you to check out a tweet he had the other day. And Noam basically said that because of test time compute, if we let things run, the current models run long enough, they can solve almost any problem. What that means is that we're at recursive self-learning, but we're lacking compute. So the world is going to be massively consumptive of compute. He's the best at building and standing up the compute. There are rumors out there that he's already putting in for 20% of all the Vera Rubin volume, right, from Jensen Huang. that he's going to take it and stand up more data centers for himself. It creates tremendous optionality for X.AI. Make no mistake about it. Elon intends to be on the frontier himself. He is not ceding the AI race to Anthropic and OpenAI.
But at what price, though, right?
What?
Because I don't dispute anything that you're saying about what the future looks like, but for the sake of the viewer, I want to just draw attention one more time to the price we're talking about paying for this, because this company's coming public and it's one of the top 6 or 7 largest companies now trading. That is massive. And it's also going to have massive implications for the entire market itself going forward the rest of the year. So I think it's really important, if you're a viewer watching this and thinking, with all of the excitement, have I missed the boat? Do I need to get in on this? Before you open up your trading app and get ready to place that trade, I just want you to think about the price that you're preparing to pay.
Well, I think Brad's made that point repeatedly, that, you know, the greatest rewards arguably have been realized in the private market to this point. You're paying the valuation you are today on the massive bet that people are making for the future.
Right.
If you don't believe in the future, then you wouldn't buy the stock today. You're obviously making some degree of a leap of faith, which is why the market cap is now above $2 trillion.
Right.
Now, if Maguire of Sequoia says it's more like NVIDIA 3 years ago, is that where we're heading? I mean, that's $5 trillion.
Well, actually, you know, NVIDIA is up about 15x from where they were 3 years ago. So I don't think Sean was suggesting that SpaceX is going to be up 15x over the course of the next 3 years. But where I think he was right is he's talking about all the untapped optionality. Orbital data centers, launch 2 to 3 times a day. What that unlocks in terms of the space and communications business, what that unlocks in terms of AI hyperscaler business. Again, if you think about Terafab, this year we added 25 to 30 gigs of compute. Elon's talking about adding 1,000 gigs of compute a year. But I want to come back to this thing about whether we should be running out and buying this today, because I'm not here to pump the stock to every retail investor out there. You're absolutely right. It's fair value. Today it's trading in an open market, and I would say it's fair value today. There is no get-rich-quick scheme. We saw what happened with Cerebras, right, just a few weeks ago. It pops on the open, it sells off. I think that creates opportunities then for people who are doing their work to step in.
Can I ask you a question, Brad?
Sure.
When you're getting a lot of comparisons to Meta, another large IPO, came public, did what it did, sold off, gave investors an opportunity to get in because of the size, because of the news flow that was around it, because of some of the lockups that came up. What do you think about those type of comparisons, given you're an investor in both, as am I, by the way?
I mean, the reason that Facebook sold off, and we were huge buyers into that sell-off, was because
there was an issue at the open.
They made a bet on HTML5 rather than native apps, and people didn't think that they could monetize their mobile application, and everybody was moving off of desktop to mobile. So there was a fundamental reason that caused a lot of question. It was not just a valuation question. And by the way, when it was on the cover of Barron's, if you remember the huge arrow going down, it hit 17 bucks a share. We put 20% of our fund in. It was a one-way street from there up. So I mean, like, that was a counter indicator. And what they did, like any great founder-led entrepreneur, is he pivoted. He said, okay, we'll just go build a mobile app, and they monetized the heck out of it. The same thing, I think, when you're looking at this. You shouldn't, if you want to have a little fun and day trade this thing and try to make a few bucks, great, have at it. But if you want to bet on this over the long term, if you take Morgan Stanley and Goldman Sachs' numbers, I have my 15-year-old intern. He's around here somewhere. He's interning with Altimeter this summer. He's using Fable 5 to build his SpaceX valuation model. He's running all these Monte Carlo simulations on where this, it's totally fascinating and exciting. But he said, Dad, my target price for this in 2030 is that this can be a 2 to 3x. And then we talked about what that meant for the IRR. What's the annualized return, for that? So it's not a 15x over the course of the next 3 years, but I think it will be a competitive return with the best in technology, with a call option to the upside. And so for any institutional investor, any hedge fund investor, this is a must-own for most of us in our institutional portfolios. And 15 days from now, you're going to see $20 to $30 billion of demand roll into the market as the index funds start buying the security.
Well, young Mr. Gerstner sounds like he's well on his way as well, a future guest, perhaps, of the most in the future IPOs. We'll see. The idea that SpaceX and Tesla could one day combine, you put a lot of stock into that?
I think it's a high probability event. I would frankly encourage Elon and for his own sanity to do it, running these two public companies that have such an overlapping mission. I mean, at the primitive of robotics is AI. Right. And so, you now, rather than having 4 different places where he's building AI, remember, just a few months ago, you had Twitter over here, you had X.AI over here, you had Tesla over here, rolling these things all together. Data. Right. And giving him both the cost synergies associated with it, the data synergies associated with it, the revenue synergies. I think it will accelerate the path, right, to Optimus. It will accelerate the path to X.AI being a frontier model.
Well, just to get Terafab under that roof will do a tremendous amount to get you where you're talking about that call option to the upside, because right now they're not vertically integrated, which means you're losing.
And there's a debate as to whether, remember, Elon has control shares and control of SpaceX. He doesn't in Tesla. Right? And so there are a lot of people saying, well, he's going to do it so that he gains control. For most of us as shareholders who want to back founders who have control, I'm actually excited about that.
For sure.
Right? I have no problem with Tesla coming in here, maybe at a bit of a premium, in order for Elon to consolidate his bets on AI and robotics.
Could we speak to the Musk premium, if you will? All of you, really, if you consider how unique this story is and how unique he is as an entrepreneur. He's certainly one of the greatest entrepreneurs and operators, technicians, technical thinkers that we've ever seen. If you consider, a pioneer in digital payments from way back when, Neuralink, Boring, XAI. He didn't found Tesla, but he joined and sort of took it to another place. Obviously. So much of what everybody's going to be buying into today in some respects is him.
Yeah.
Speak to that.
Well, I think there's too often we don't acknowledge on this desk, right, that 1 or 2 people at the heads of these companies determine their fate, right? So you want to back, if all I did in my career is back the best founders and the best leaders and short the others, I would have done extraordinarily well. Too often you try to make excuses for the person you know is not a great leader. In this case, he's an extraordinary visionary, technologist, engineer, and next to him, people like Gwen Shotwell, who are extraordinary operators. It is, it's the type of people that you want to be backing. But one of the things I'd bring up, Scott, remember, Elon came here from South Africa, and Elon's talked about this, at length. We need to remain the place that all these incredible people that want to invent the future want to come here. They want to come here and do it. And unfortunately, when Elon was in California, he was being demonized and attacked by people like Lorraine Gonzalez, who ran the state Senate in the state of California. And when he left California, she said, good riddance. This is a problem we have today in America. We need to celebrate entrepreneurship. This creates the abundance that we have. Yes, we need to do things like Trump accounts to raise the floor for these kids and do all these things.
And by the way, kudos to you for your involvement.
Thank you. But I look around the table of SpaceX, the number of people who came from outside the United States to invent the future, to create this $2 trillion of value.
Well, I mean,
and the $2 trillion of value goes to teachers and firefighters.
That's fair, but in fairness, we are having not that I want to go down this path, but we are having a broader debate about immigration in this country.
For sure.
And if you want to cite the fact that he's from South Africa and we need more people of his quality or whatever to come into this country and try and be the next or move the ball of this arena forward, then your message needs to be heard as much in the halls of this place as it does down in Washington.
For sure.
Because that debate is fierce right now, as you know, and it's trending in a direction that's not what you hope it would be.
I would say that we are pounding the table in Washington and on sets like this. 2 things can coexist. We can have a real border where people who come here illegally are stopped, and we can have a fair process where people can legally come into this country. And I would say we need to double and triple down. We need to be strategic. We need to go around the world and recruit all the Elon Musk around the world, make sure they know this place is the best place to pursue their dream, to innovate, to get risk capital, to do all these things. And by the way, when those 2 things get commingled down in Washington, I'm quick to point out the difference, right? These are 2 very separate issues. This is what made America. This is what we're going to celebrate on the 250. Folks like Elon who risk it all, come here, start with nothing, and build one of the most extraordinary success stories in the history of the country.
Well, I mean, because there's a debate even in of itself on H-1Bs. So
Correct.
let's not.
You heard me. Double down on legal immigration.
I hear you. But there's a debate in D.C. about that too. So it's a complicated issue. I said I didn't want to go down that road, but if you drove the car down there, we were going to go there for a minute. At least get it on the table, because all of these issues matter, and they matter in technology, as all of you know. You all take a break? We'll take a quick break. All right, we'll come back. We'll talk more, obviously, about the SpaceX IPO. We will talk about what's been happening in technology as well. We're back right after this. Well, there it was, the open at 150. We could take a look in real time to see what the stock is doing now, but that was just a few moments before 12 noon. We have about a 21.5% gain. So it's really been holding in. Again, I just cite what Leslie Picker was reporting earlier, the so-called sweet spot. And this thing seems to be anchored to that. We also noted, guys, what some of the firms on Wall Street are saying now about the prospects for this. Price targets, and what I told you that Wolf Research came out with. Oppenheimer did 190 as a price target, outperformed. New Street 165. They didn't rate it. Just a few moments ago, CFRA came out with a sell rating on the stock. That's what makes a market. 115 is the 12-month price target that they have. We'll go through the note a little bit and give you an idea of what they're saying, but they point to the strengths, obviously, that this company has that have already been identified, but they do have a negative outlook, that they have platform optionality, but the investment case increasingly depends on investors capitalizing on outcomes that remain unproven, particularly Starship. I mean, that's the bet, right? You say the targets are huge, no way in heck they can reach them, sell. You say the targets are huge, don't underestimate what they've already done. They could easily reach some of these things if they do things that are right, buy. Therein lies the market.
I mean, in technology, a lot more money has been lost sitting on the sidelines, wringing your hands about all the things that can go wrong, rather than betting on the upside. And when you have the single best entrepreneur, innovator, and company at executing and operating in the history of technology, to me, it's like kind of a no-brainer to take that bet. And the other thing I know is the downside from 135 was $20. So really, you're going to sit out on, the biggest opportunity in the history of technology, perhaps, right? Because you're worried about $20 to the downside. The amount of money that has been lost by very smart people on Wall Street with that exact same argument about Meta, about Alphabet, about every other company that's come before them is a long list. We're sitting here because we're optimists on the future of America. We believe in the future of technology. And, again, I don't think you have to rush in today and push all your chips on the table today, but this is one you want to have exposure to.
Well, I'm glad you addressed retail. And Malcolm, I felt like earlier you were trying to speak directly to the retail investor in that cohort who's watching our program today. I wonder what you make of the restrictions that were put around some of the retail investors who wanted to take part in this IPO from a lot of the, some of the retail brokerages that were out. And what do you think that means in the greater picture of how we should think about this really important cohort and how they want a piece of the action? They want to feel the excitement that Gerstner does and that Etheridge does and that Link does and Sechin does.
Yeah, so I think it's a really important distinction that you're making, because there's institutional buyers who are going to hold on to this thing forever, right? Their time horizon is forever. And then there's the folks that are wanting to get into it, catch the wave, hoping to be the next Tesla because they missed out on Tesla however many different times it had its pop. And I've talked to you, Brad, off camera several times. I know how you feel about retail investors getting an opportunity to participate in some of these bigger opportunities that we're talking about. But what I think we have to keep in mind is that the get rich quick, to your phrasing, is not in this. We're talking about $43 billion roughly is what was raised from all IPOs last year combined, non-SPAC IPOs. We're talking about roughly $200 billion being raised this year between three companies. that is significant. That is going to suck a lot of oxygen out of this market before the end of the year, and that liquidity has to come from somewhere. So I'm concerned about the retail investors who stand to get crushed by that wave if they aren't careful, if they're trying to get into these for the wrong reason. If it's a quick flip you're after, Fidelity you're talking about has restrictions in place about selling the shares within 15 days of the initial allocation. I think SoFi's is even more punitive. It's roughly 30 days. Schwab's the only one I've seen that doesn't actually have a written block against it, but I think they said something like, we don't want to see it here. So still, there's these mechanisms in place that you as a retail investor need to be aware of, that if your plan is not to hold on to these shares for quite some time, you might be better off waiting a month before all the different mechanisms that are in place related to the roll-off, the lockup, NASDAQ buying that's going to happen. There's 4 or 5% allocation of NASDAQ funds that are going to go into this. Like, there's a lot of things that are going to happen that you could wait a little bit.
And that's why I said you buy a small position and you set it and you forget it, because $18 billion in total revenue is expected to go to over $200 billion by 2030. EBITDA, which is interesting to me, profitability, got $5 billion to $128 billion. Let's just say, what if they just go from 5 to 25 billion? That's still huge in terms of operating leverage. I agree with you. You don't want to day trade this thing. I wouldn't know how to do that. But I do think that the growth is so phenomenal that we haven't seen something like this ever.
Are you buying it, by the way?
Well, I'm restricted today because I'm talking about it, but I will be next week for sure.
Okay, I just wanted to make sure we're on the record. And
I'm on the record. If I could do it today, I would.
All right.
I think the points that Malcolm's making are absolutely true. You know, it does sound smart to paint the bearish case, but rarely are bears proven right. And I'm not saying he's painting a bearish case, but let's remember, this supply is being brought to market. It is significant. But the share buybacks that are happening every day are reducing supply in the market. And if you actually looked at the statistics, and I'm not saying you, but market writ large, shares are being taken out of the market broadly with the buybacks that we're seeing that are ranging between the 1% and 3% range. Okay. So you're creating ample liquidity to be able to buy these. Now, you're right in the technology space. I think that's probably why you saw some volatility in some of these other names. Other reasons, of course, moving from cap light to cap intensive businesses, which makes no sense to me, because if you're a company that believes in your future and you make those investments, they are necessary. Oracle, everybody that is spending money, whether you think it's prudent or not, and Brad, I know we talked about this in late 22, getting Meta right-sized on their spend, but the reality of it, you can pivot spending. You can't pivot being behind. And so everybody's going chips in right now, and I, based on the opportunity set, think that's very logical to be doing.
I've heard this argument before about the idea that the share buybacks are going to help to reduce float and that sort of thing. But I would submit to you that if you look at Google having to do not having to do, but choosing to do an equity raise at $80 billion, you got Oracle doing another $40 billion right after they did 43 last year, or maybe I have it the other way around. Maybe the share buybacks that we're hanging our hats on are going to slow down as we continue to go, because these companies have run out of free cash flow to throw at building these data centers, and they're now going to have to raise debt through special purpose vehicles and other off-book financing. The buybacks that we're talking about, that we're banking on, should be slowing down this year.
I think you will see it slow down, but that gives me all the more confidence in the infrastructure build-out, picks and shovel plays. The more the CapEx goes up, the more they benefit, and we're seeing record backlogs. We've been talking about record backlogs at some of these AI industrial companies for years, and they're doing quite well, actually, and they've held up remarkably well in the face of kind of AI doing kind of wobbling over the last couple of weeks.
Can I ask Brad a question? How do you think about all the SPVs that have been created to invest in and around this, the venture companies that invested in SpaceX, they're in lockups to varying degrees, that many, as they come off to get their own liquidity, to have their own wealth experience, are going to be net sellers? Do you think that's a future opportunity in the name, just because of the magnitude of what exists out there? And I'd just like to get your take on that.
Well, first, I think there are sellers in the market today, right? That's why we have every single share that's bought, there's somebody on the other side of that trade. And most of us who put in for IPO allocations today, while we got some, we didn't get what we wanted, right? And so there was a lot more demand, both retail, Asia, Japan, et cetera, than was fulfilled today. Yes, there will be people in venture that mid-August when the lockup, remember, this is a dribble lockup. So it's much like the Cerberus dribble out. So it will start in mid-August. Some of this will start to be distributed. I imagine there are people, LPs and funds, that are hedging today. That's probably who's taking the other side of a lot of these trades today. So I don't expect that you're going to have some moment where there's some big overhang. Because on the other side of that, you have index inclusion. I think the amount of demand coming from index inclusion is probably even more than the selling pressure that you're going to see from the distribution. But yes, it's going to take 3-6 months for this to shake out in terms of exactly where is the supply and demand. And remember, during that period of time, we're probably going to get a lot more deals announced. I know a lot more companies that are raising their hand and they're saying, hey, Elon and Gwen, do you have more of that compute that I can buy from you? Remember, there is a massive, massive compute shortage. We saw Fable 5 come out this week. That is, Anthropic's model that I think was probably trained and done sometime in January, February. There are models coming out after that. They don't have enough inference to serve the demand that's out there in the market today. So the world is starved compute. And so I think that you're going to see more deals announced by these guys. We got Starship launch coming in a month. And by the way, let's also remember, they're taking on risky stuff. We're going to have days on this show where Starship fails. Right? And the stock's going to be down 5% because Starship failed. Even though Starship, all their rockets have failed a lot over the course of the last 10 years. And on that given day, if it was a public stock, the stock would have been down on its way to higher highs, right? So there will be volatility embedded into this one. But structurally, I think there's plenty of demand to sop up any supply from SPVs or anything else.
Great answer.
We'll take a quick break. You got a thought on this? I mean, it's obviously combining everything.
I do.
His Tesla stake, and that's how you get to 1T.
I do. On the one hand, I think it's important to realize that success like this is a feature of our system, not a bug. It drives the GDP of the country. It grows aggregate wealth in the country. But the reason we started Invest America and Trump Accounts 4 years ago is because the returns on capital today are radically greater than the returns on labor, which means we have a growing wealth gap and we can have trillionaires. But now we need to get capital into the pockets of every child born so that they can compound in the upside of SpaceX, in Alphabet, in all of our great companies, like everybody else in the market. 60 to 70% of people today don't compound in the upside of our capital markets. I think you'll see a lot of announcements in the weeks ahead. You've seen some of them rumored in the press about people who are going to be donating shares, perhaps, or dollars into these accounts. We're at the very beginning of the largest change to the social contract in the history of this country, where every child, every citizen compounds in a capital account from birth. That will help to close the gap. I celebrate Elon getting to, the top of the podium today. I just want to make sure that we change the system enough so that everybody else feels like they're on the same team, that they're winning when America wins. This is a day America is winning. We need to celebrate that, and everybody needs to feel like they're winning.
All right, welcome back. SpaceX, there it is. Highs of the day up about 26%. 169.96. What do you make of just the early part of the trade? I keep saying, what Leslie Picker was reporting about the so-called sweet spot. Like, you don't want to see these things. You don't want to see these things do a massive pop.
Yeah. I mean, listen, hat tip to the banks. As you said, $75 billion IPO. This was a big undertaking. Morgan Stanley stabilizing this thing. I think it's right in the center of the bullseye of where you'd want to see it at this moment. And remember, they had to navigate this with things going on around the Iran war, CPI coming in a little bit odder. To see this thing up 25%, I think everybody around the table is thrilled with the outcome here. Particularly given the pullback we've seen in technology over the last 2 weeks.
All right, we're back right after this. Let me ask you before I let you go. What do you make of what's happened with tech lately, particularly chips, memory? Was that an inflection point that we just hit, or what's the story here?
Yeah, I said last time I was on, we saw Anthropic's revenue in February and March. It lit a fuse under the market. We went parabolic in the semis sector in April and May. But remember, this is a tale of two stories in tech. Software is down 8% on the year. Internet's down 15% on the year. This has been about the semiconductor and AI compute trade almost exclusively in technology. That's what's propping up the indexes, right? And so this all hangs on the fact that we're going to consume more tokens in the future. The second anybody starts questioning whether or not we need this much AI compute will be really hard for the market. I happen to be bullish on that, but that's what you need to keep your eye on.
What timetable do you think we have to look at there?
Yeah, as far as I can see, out into 28, 29, we have natural constraints. There is not a dark GPU. This is not dark fiber. There are no dark GPUs. What is the natural constraint? We can only produce so many wafers in the world, so many memory wafers, so many logic wafers. That prevents us from building as much compute as we would otherwise go ahead and build.
As long as CapEx continues to go higher, which we're seeing it from Google, from Meta, from Oracle, I mean, the story is alive and well. And then you do want to own a lot of these companies that are getting pulled back, like the semiconductor companies.
As long as they continue to spend. I think we've reached full-on crazy town personally. You look at the second-order effects, the PHLX and the SOX, the move in those over the last 2-3 months. I've started to rotate into financials and REITs because I think that's probably the safer way to
Well, what happens if, to Brad's point, and certainly, the analyst community is coming to realize that maybe they grossly underestimated the earnings power of the Microns and the other memory names and some of those key components within the AI universe, and the price action is not necessarily reflective of a valuation story being completely out of whack. You got like less than 10 times on Micron. The price action's got people a little bit nosebleedy.
But we've also gotten to a place where now it's not the second order or even the third order effects. You have people trying to go downstream and find what's going to be the best supplier of, hammers to the construction companies building the data centers for the hyperscalers. Like, it's really gotten to a place where we've gotten way too frothy in terms of what's the extra thing that they need next. What's going to be supply constrained is the way that I'll phrase it. I think that is a good indication that we're probably due for a slowdown in that theme, at least near term. And so that's why I'm not talking about leaving tech completely. That'd be crazy. But I just think as you're taking gains, a couple of great places to look to rotate into: REITs, also the financials.
Well, you got about a 29% gain in SpaceX now. 174 thereabouts is where the stock is currently trading. You have a final trade for us today? Did you come with one?
I do. Jeffries. I'm going to stay on his theme. If you believe financials are picking up, this is an incredibly inexpensive way to play it. Capital markets look like they're doing great. They're leveraged to that. I think Jeffries.
Who's got Goldman?
Speaking of financials, you know who else is having a great day?
You may not. I was going to say you're not buying the SpaceX
the lead
IPO,
underwriter
but
of
you're
this
buying the
IPO.
lead.
Morgan
Yes.
Stanley.
All right, Steph.
You need natural gas to build data centers. You need that power. Kinder Morgan.
You got one?
Yeah, on the pullback over the last week in semis, semis are down pretty significantly. Today, they're getting a little bit of a bounce. I would say SK Hynix. Back to your point, 7 times 2027 numbers, the single greatest bottleneck in the production of tokens.
Great having you here again.
Thanks for having me.
All right, let's make this a regular thing.